Wall Street just had its worst January since 2010. My name's Des here at Grok Trade, and this is the weekend edition. Anyway, it's good through February 2nd, 2014. The markets are just pitiful, just in the tank. Just makes you want to puke to see how bad the markets have been here lately. Check this out. On Friday, the Dow down 150 points. And you have the VIX right now. If you look at this, up over 18. Been a long time since that's happened. We'll take a look at this. Anyway, check this out. Here's the S&P 500. We came up, forever we've been talking about this rising wedge. Forever we've been talking about this bearish divergence. And sure enough, we go into this triangle. This was our chance right here when we had this ascending triangle at the top. This was our chance for us to rally higher. But the Fed doing the tapering, really pulling back the purchasing of the bonds. And they're doing that pretty aggressively. And that was going to kill the markets. And sure enough, catalyst to the downside. For several weeks, we stayed between a trading range between 1819, 1848, right here. But then it was this day, if you go back, is January 23rd. When we closed below that, that was the break in the ice. Game over. Because up until that point, we stayed above it. Support, 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 boom, broke it, game over, bleed out, bleed out, bleed out, bleed out. Check this out. Here's your railroad. Red, white, red, white, red. Very, very typical. But here's the big problem. I highly, highly recommend that you go over to freeonlinetradingeducation.com, go to the charts, go educate yourself. Look at the low base formation. This is crucial because this is more bearish than it is bullish. Actually, when you get this railroad, this barbershop type sign print, red, white, red, white, red, white, usually that's more bearish by itself. But then you add a low base, big drop, 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 base, 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 base. What did not happen was you did not see a bunch of buyers buying up this weakness. It didn't drop, drop, drop all this weakness and start to go higher. It didn't do that. It stayed low. Nobody was committing to the upside. People kept selling into strength. Bad news for the markets. If you look at a weekly chart, which is hugely important, you got to always look at this. Here's our only saving grace right now. And I want you to check this out. So if you go back all the way to October of 13, December of 13, support, support. We come up here, a little bit of support there. Support here in August, okay? And then we go higher here, higher here, higher here. Boom, we're at support. We're still above the zero line on the MACD, the centered oscillator. Histogram is still negative. But check this out. Major support. We need to bounce next week, period. It has to happen. If not, this market is going to is going to be bad if we start to break down here. If we do break down here, we'll go below the 0 point. And man, the last time we were above and went below, well, it did it here. But man, you see major corrections when that happens on a weekly chart. Big rising wedge, bearish divergence. You see it right here. And we're at support. Will it hold? Chances are no. Why? Because the daily has a low base. It looks like it's wanting to peter out. If you look at this line, support, support, or I'm sorry, resistance. I need to extend this out. Resistance, resistance, support, support. If you look now, support. A lot of support right here. So if we break this, the weekly chart will break this. Ouch. Now let's look at the monthly. The monthly, we said, man, we just been going higher and higher and higher and higher. So because the month now is over, I'm going to massage these lines a little bit to this. So look for a correction. So the month here, we have a lower high and a equal low. But this here, even though it's technically not a reversal type pattern, so we have a decent chance of just chopping sideways for the next year, which would be just I mean, you'd want to drink Maalox going through that. We would have to do a lot of day trading to start making your money, opposed to doing it through swing trading like most of you guys do who watch this video. And so anyway, if we do go sideways the next year, that's going to be a day trader's delight. Anyway, let's take a look at NASDAQ monthly chart. Up, hit resistance. We have support down here, resistance here, resistance. We hit, now this is a reversal pattern. So for the month, you have a spinning top, but it's a bearish harami. You can go to the chart school to learn about this down here at the website. Bearish harami, bad news. You go to a weekly chart, we're at support. There's our saving grace. We have support, support, support. We need to bounce. That needs to happen. If you go here to the daily chart, we drop, and a choppy mess. Choppy mess. So we need to bounce off of these areas of support on the daily and the weekly. It needs to happen. Take a look here at gold, gang. Gold is just a train wreck. Anyway, you shake this, it's just problematic. So here we have support, resistance, resistance. And I'm going to get rid of this line now. It's been pierced too many times. I mean, this is nothing more than a big bear flag. If I draw a couple lines for you, this is a little crude on how I'm drawing them, but it's pretty close. That's a bear flag. That looks more bearish than bullish for sure. The weekly chart, we're caught up in a lot of lines here. I don't know. As long as I can stay above, I would say 118. If we can stay above 118, that's probably still a buy on a bigger time frame. The monthly chart, look for a bounce, man. Falling wedge is starting to break out to the upside. Gang, this is actually really bullish on the big time frame. So if we can stay above 118, this is a buy opportunity for gold. Nice to see. Silver, monthly, we're at a major support level. If we can stay above 18 bucks, buy this thing. This is a very big reward to very little risk here at this support level with a nice stop loss. If you look at a weekly chart, let me look at this. Ouch. I hate that it broke that trend line right here. Daggone it. That's no good. I wish it had stayed above. If it can immediately heal itself and stay above 18 bucks, you're going to be just fine with silver. Silver has popped down to a major support level at 1845. Man, that is a buy area with very little risk. If you got a tight stop loss on that, that is definitely worth trade opportunities for long-term hold. Very, very cool. Apple here. Now, mark my words. Apple has been in a blood bath this last week just due to earnings and estimates. But check this out. You have a gap down run up. Mark my words. Next week, nothing but bullish. I guarantee you. There's no guarantees in trading, so take it. I guarantee. And if I'm wrong, you can hold me accountable to it. But from my 16 years of trading experience in the live markets, 495, we're not going to see anything below that for some time. I see, especially in the short term, nothing but upside opportunity here with a gap fill well in the making. So, put myself out there on that one. But hey, I'll tell you this. If I nail this, let that be a testament to the services that we provide here. We do the very best when it comes to trading education. And I don't say that lightly. We believe in being a bull and a bear. We believe in fundamental analysis and technical analysis. We want to combine the both of them. Here's the weekly chart on the Apple. Here's the monthly chart. Just horrible. Watch the next few months. We have a better chance of dropping here. So with that said, I'm going to say a short-term rally here. Short-term rally, and then it's going to turn around and drop just based off what I just saw on the larger time frame. Facebook doing exceptionally well. Earnings, boom, to the high side. Look for nothing but upside potential. Maybe a little base here to build a little bit of support, and then boom, rally to the upside. Google. Check this out. Nice rally last few days. We're at a resistance point, though. It needs to be really careful if you're in Google right now. We're at 1180, 1181, some change. LinkedIn, just stay away from it. It's got, I don't know, a double bottom. We do have a double bottom here. So you could have a double bottom trend reversal pattern to the upside. Might be a buying opportunity. Microsoft is up and away, not doing too bad. Now it's above this resistance level. Twitter, At resistance, be careful. Support, support, support. Broken. Now is resistance. And this coming across big time resistance. I mean, if we can get over 65 bones, boom, look for an opportunity to buy this over $65. Amazon, just horrible. Just falling out of bed. Bad, bad, bad. Closing at the rising 100-day moving average on big volume. Amazon, not too good. Netflix, just up and away. It's at 409 now. Not too bad. Netflix, I need to make sure I'm not holding that. I need to disclose it if I am. Am I holding Netflix? I am not holding Netflix right now. Wish I was. That's not too bad of a rally here. Now the VIX, take a look at the VIX. VIX here. Look at this. Boom. Last time we were here, we did drop. It was not too long ago, actually. We got up to 19. Man, back here in October, it got really nasty. But we're up here again. So I foresee next week probably going bullish in these this VIX. The fear will drop. You're going to see precious metals start to bounce. You're going to see the market start to bounce. But I'll tell you, the problem with that assessment is the daily. But the weekly, this is the S&P, by the way. That's a low base. That's more bearish than it is bullish. But the weekly is at a major support after a pullback. That's more bullish than it is bearish. The weekly trumps the daily. Anyway, I threw a ton of stuff at you. Anyway, do the best thing you've done for yourself in a long time. Invest in the best trading education that's out there. I'm pimping my own wares here. That's fine. Go down here, the premium products. You definitely want to do the 201s. Do the Grok Trade mentorship. Get involved. Take care. Safe trading.